On PM Express tonight, we're looking at the microfinance shake-up, and we are assessing Bank of Ghana's crackdown on insolvent companies. And you may be aware that over 300 insolvent microfinance companies have lost their licenses due to liquidity challenges. And over the last few days, it's been topical in the news. The latest cleanup by the Bank of Ghana leaves the country with only 137 microfinance companies in good standing out of the over 500 which existed previously, and I'll tell you why. Now, you may also be aware that some 900 million Ghana cedis have been made available for Bank of Ghana to begin the cleanup of the microfinance subsector, but every claim by depositors will have to be validated before payment is made. And we'll look at what processes will lead to the payment. Now, pursuant to Section 123, subsection 2 of Act 930, a receiver with PricewaterhouseCoopers has been appointed for the specified institutions that needs to be verified to get their payments. Now, the Bank of Ghana says the cleanup has become necessary to protect the stability of the financial system and save affected depositors. Concerns, however, have been raised with all of the cleanup exercise the Bank of Ghana has embarked on, and I'll take you one after the other with the concerns. Now, the concerns have been, one, with the regulators, the timing of the cleanup by the regulators. The other has been why the Bank of Ghana issued too many licenses. People think that the issuance of too many licenses to microfinance companies is what is accounting for the Bank of Ghana now going in for so much money to do a cleanup exercise. Now, the Bank of Ghana's monitoring and evaluation mechanism has also been questioned by experts in this whole cleanup exercise. The Bank of Ghana's communication approach is one that people are raising questions about. How they slap people with information, how they do not communicate annual reports of these microfinance companies. And we'll be delving into that shortly when the conversation takes full swing. And again, whether the 900 million Ghana cedis available for the cleanup exercise will be enough in the absence of a comprehensive communication from the Bank of Ghana's monitoring of the microfinance sector. We'll also be delving into this. It's a very important aspect of the conversation. Now, we know that 137 microfinance companies have been confirmed by the Bank of Ghana to be in good standing. Now, one other issue that has come up is the relationship between the Bank of Ghana and the microfinance companies. Remember, the Bank of Ghana is supposed to relate to these companies to help them grow. Have they done that over the years? We'll be delving into that shortly. Now, how should Bank of Ghana's relationship with these 137 microfinance companies look like going forward? And I have the experts who will provide the answer. The Bank of Ghana says there will be no job losses. This is what the Bank of Ghana says. But financial experts say they think otherwise. There will be obviously some job losses. So it's the Bank of Ghana, their word against the words of financial experts who are actually on the ground. Now, why has the Bank of Ghana delayed in cleaning up a sector? This is the big question we'll be interrogating tonight. Also tonight, Bank of Ghana has fined Barclays Bank over 4 million cedis, and it says it's made some frivolous quotes. The frivolous quotes contained in the Interbank Act 4.2, that is what the Barclays Bank has violated according to the Bank of Ghana. All of these, when I introduce my guests, we'll delve into it. Please stay with us. Welcome back to PM Express. My name is Aisha Ibrahim, and many thanks for choosing us. My guests in the studio, two fine gentlemen who know everything about our topic for discussion. Let me introduce to you Joe Jackson. He's the Director of Business Operations, Dalex Finance, and Nano Tui Champong is banking consultant. Good to see you, gentlemen.
Thank you.
I'd like to start with the release that the Bank of Ghana issued just this evening before we started this discussion, and it's talking about how the Barclays Bank has violated Order 5.2 of the interbank order, and it says the Bank of Ghana has been the Barclays Bank has been fined over 400 million for violating that order, and it says they put on what frivolous quotes. Now, frivolous quotes we understand to mean that the bank is putting out what it doesn't intend to give out to customers. First of all, I'd like to find out your preliminary observations or your appreciation of the situation, Nana.
Well, I comment generally about the issue of frivolous quotes they refer to. Now, the market division, market conduct section of Bank of Ghana issued a document dated February 2019 as to how markets should conduct themselves in the foreign exchange market. And the 4.2 referred to is paragraph 4 of that document.
Yeah.
And it clearly states that brokers and dealers are not supposed to quote frivolously. By frivolously, they mean whatever you quote, that is what you should either buy or sell.
Okay.
But frivolous quote is where you quote and then you are not able to honor for one reason or the other. Okay. And that is the infringement that we are talking about, okay, that they should have not quoted what they couldn't honor. Yeah.
So there's been a number of issues that we're told this could bring on the Barclays Bank. One of the issues fundamentally has been that of the company's reputation, the reputation risk that Barclays Bank would have to deal with. But Joe, do you think that Bank of Ghana has been too harsh with this decision?
Okay, now first, a small correction. The amount is 4.5 million, not 400.
Over 400. No, I said over 400. It's 4.5, yes, approximately. 4.5, yes.
Million. Now, that's number one. Now, the issue simply is this. Bank of Ghana wants to signal to the market that now I'm serious. I'm serious, and I'll come down harshly if you infringe any of my rules. And this is at the given the backdrop that for months, maybe even over a year, we've been bashing Bank of Ghana for lax regulation and for lax leadership. So on one hand, you can say that you can't complain that Bank of Ghana is lax. And when they take action, start to cry foul. They have to take action.
Okay.
So as much as it may be unfortunate for Barclays in particular that they've been, in a lot of ways, I see them as being used as an example to the rest of the universal banking community, they have to take it. Because if they hadn't infringed the rules, Bank of Ghana would not have come hard on them. In any case, one of the questions you have to ask is, what kind of profit is Barclays making? And how much of a dent will this make in Barclays' profit? Okay. Not that much. I mean, they will find it painful. They will be hauled before the regional and global offices to explain, and they will come down hard on them. Somebody might even lose their job. And there will be some amount of reputational damage. But hey, where Barclays is concerned, this is painful, but it's not going to do any damage to the bank.
It's not going to do any damage to the bank. Well, we're looking for, because they've also issued a release, and they explained to the public that they're working with Bank of Ghana, that's Barclays Ghana, and I think viewers must be aware that this release is related to only Barclays Ghana. And it says that they are working closely with Bank of Ghana to resolve the issue. So we look forward to that resolution. Let's get down to the microfinance shake-up. And it's been topical throughout since Friday, since that announcement was made and the company is published. Now, we know prior to 2011, there were no proper regulations for these microfinance sector until after 2011, when the Bank of Ghana decided that they were going to do a proper monitoring and a proper regulation of these. I mean, in the end, you realize that many of the microfinance companies that existed now had to go and apply for their licenses, and the new ones had to also go through the right channel to get things right done. But all of these happening, the people who feel that Bank of Ghana probably issued too many licenses. How many do we have? Over 500 microfinance companies previously before this shake-up. Nana, you think that, or you would agree that Bank of Ghana issued too many licenses and that's the reason why we're here?
No, in the sense that in a free market, you normally set the rules, and if institutions meet the rules, then you accept them. You cannot have your cake and eat it at the same time. So what happened with the sector is that until the passage of Act 774, which is the Non-Bank Financial Institutions Act, which moved microfinance from the police, Ministry of Interior, to Bank of Ghana, they were effectively being regulated by the police. That's where they used to get their license from. Okay. So when Bank of Ghana, Act 774 was passed in 2008, it took Bank of Ghana a couple of years for them to accept responsibility for regulating. Then they realized that there were over 1,000 microfinance institutions in operation. So they had one of two choices. Either they close all of them down and ask them to apply for new license, or they license them. So they had a halfway house where they identified some 650 of them and gave them provisional licenses. One of them is DKM Microfinance. Yeah. So after the license, they gave them 6 months to come and prove that they've got a viable business, and then they get a long-term license. So with that background, you can't say whether there were too many or there were not too many. Okay. So from then on, their minimum capital started changing. First, when they started, minimum capital was 100,000. Then moved to 500,000. And the last year is moved to 2 million. Now, all of this saw some attrition rate, because when it moved from 100,000 to 500,000, some of them just handed in their licenses and said, we can't get it. From 500,000 to 2 million, again, some did. And so as of the day before Thursday last week, we had 484. Now, there is some attempt, which I object to bring in money lenders under microfinance. Now, money lenders are not deposit-taking institutions. The deposit-taking institutions under Act 930 do not include money lenders. So that's what they're giving them some funding they call microcredit. Now, for them, they are not taking deposit from the public. So they are only lending. How they get their money is up to them. So really what we should be talking about is the microfinance institutions who are deposit taking. They take deposit from the public and they give out loans to the public. So when depositors' monies are locked in there, then there's a need to try and get depositors' money for them. And this 900 million odd that you mentioned, it's all in tune with the government's intention that no depositor should lose their money with this resolution going on under Section 123 of Act 930. That if they are in difficulty, we pay depositors, and then if the institution has to collapse, then so be it. And that's not where it's going to stop. If they have already finished universal banks, now they are on microfinance. We've got rural banks to grapple with. There's savings and loans and finance houses. Okay. So there's 3 more to go.
So there is more to go, and we'll have to brace it, whether we like it or not. But would you agree with people who think that Bank of Ghana really issued too many licenses, and that's why they're having to struggle with the way what's going on?
I will say they didn't issue too many licenses. You've got to remember that the whole point of having microfinance institutions is when we accept that our universal banks and other institutions will not go down to the bottom of the pyramid. That there are people who are operating down there who are underserved or not served at all.
Okay.
So the microfinance institutions were supposed to spread out in the areas where these universal banks either do not want to go, right, or even reverse it, by their very demeanor, the customers don't even want to go to them. So it's both ways. So the microfinance institutions served a real purpose.
So
anybody who thinks
over
that
500 microfinance was cool.
Listen, we still have tremendous population of underserved. So in fact, reverse it and say that now that you've closed down over 347 institutions, these institutions performed, okay, there were those 155 which you claim had already shut down. But these institutions performed a real service in the communities.
Okay.
Who is now going to perform that service?
Who's not going to?
So the argument shouldn't even be that there were too many. The argument should be that now that you've closed them down, what happens to these so I'm a depositor in a village outside. I'm in my village. I come from Finyabreku. I'm a depositor in Finyabreku. My options are a microfinance bank and a rural bank, right? My rural bank is tottering. My microfinance bank has been closed down. I have no options. I have multiple. I don't have anybody to serve me. If you close them down, what happens?
But I want us to juxtapose this with the staff strength of the Bank of Ghana. Don't forget that the Bank of Ghana is supposed to do a physical quarterly monitoring of these microfinance companies. You think that all of these over 500, you think that the staff strength of the Bank of Ghana could handle all of these microfinance companies?
But that's where I disagree with you. If there is a need, and the Bank of Ghana part of its mission is to make sure that people who need financial services receive them. If there's a need and you need that many institutions, get that many people.
You got the Unemployed Graduates Association.
Yes.
No, but we all know that we are struggling with the public purse in paying salaries and all of that.
We don't know because
let's deal with
I would even rather you levy the institutions when you came to do supervision. And yet, and as such, recruited more people and did the supervision well.
Okay.
Than to say that these institutions.
So you agree on that point that the people there were not enough. So one will say that they were overstretched or overwhelmed with monitoring of these companies.
You see,
that is why we got ourselves here.
In a sense, that's ridiculous.
Okay.
When you give the license, you must provide the monitoring services.
Is that what we've seen over the years?
Well, we haven't seen that, but that is a failing of the Bank of Ghana rather than a failing of the institutions that are providing services to these people.
Exactly the point I'm making. That
but the argument can't be that don't give licenses.
If you're giving too many licenses and you don't have the staff strength to monitor their activities, you will find yourself here.
Who gives you the staff strength? You see, let's be clear. We are not excusing Bank of Ghana. Bank of Ghana did not exercise its regulatory role properly. It came to the party late. And that's why so many of them have had to be closed down. If they came to the party early, we would have had more sense and more order in the sector. But that is not to say that the institutions were too many.
Okay.
Right? We still have underserved populations. We still have people who are not included in the financial system at all.
Sure.
So it's not to say that institutions are not too many. What you should be saying is that it is Bank of Ghana that may have failed to recruit, train, build capacity, and support these institutions in the way that a regulator should.
Okay. So we admit that there's a failure on the part of the regulator. And I'm coming to that point, that physical monitoring bit, because we know that the microfinance companies are supposed to be reporting to the Bank of Ghana on a weekly basis. You are there, you would correct me if I'm wrong. And then I also know that the Bank of Ghana is supposed to do a physical quarterly monitoring. And then finally, we also know it's monthly. Okay. Then the microfinance companies, we know with the banks, they provide annual reports. The Bank of Ghana or the companies themselves provide annual reports of their financial, their financial reports. But we've not seen that with the microfinance companies. Probably because they do not publish their yearly reports for people to know what they've been doing. That is why we're still finding ourselves here.
No, they are all part. The provision is already in Act 930.
Okay.
Section 90 deals with the publication of annual reports.
With microfinance.
Yeah. You see, there are 5 subsectors in the banking industry. You got the universal banks, the savings and loans, the finance houses, rural banks, and microfinance. Now, the universal banks are supposed to cause their annual reports to be published in 2 newspapers of national circulation by 31st of March following the year end.
Okay.
And everybody's year end, 31st December. Then the remaining 4, that is SNL, finance houses, rural banks, and microfinance, they are supposed to publish by 30th of April the following year.
Okay.
Now, there's no way that some of these are being, adhered to. And this is where you have the regulatory capacity challenge, where, as you rightly put it, there's too many institutions that Bank of Ghana is supposed to regulate. But that is not the fault of the institutions. Neither is it the fault of the regulator. It's a question of resources. Okay. Are the resources there? Now, all these institutions are not government-owned institutions. They are private sector-led institutions. And therefore, if they visit them, there's a fee that they charge. So I think the issue here is these microfinance institutions that have closed down, how do they fit into the whole scheme? They fit into the scheme in that the whole sector needs to be resolved. But if money was available, then it could have been done all in one go, one fell swoop. But because money is not readily available, 12.7 billion was spent in cleaning up the universal banking sector. Okay. 1 billion is being used for microfinance. Then we got 3 remaining. Savings and loan, finance houses, and rural banks to be cleaned up. Some 7 billion is being applied for to clean that. Put that 3 together, and you are talking of almost 21 billion. And that money is simply not available. And that's why it's being done in piecemeal. So now the cleanup exercise, the reform, the resolution, call it what you may, in the microfinance sector is part of a grand scheme that the regulator has come to accept that they need to do something about the industry. Okay. And that's what is being done.
I'm amazed that for such a very important sector, we are faulting in regulations because we are under-resourced. And we've had to come back to this situation with depositors. Some of them, if not verified, will not get their monies at the end of the day. We've had job losses over the years. But these are things that could have been prevented. I mean, it's lack of resources.
It's easier said than done. With the benefit of hindsight, I agree with you. However, since we don't have hindsight, but you have foresight, and the lack of resources is a factor that has got to be taken into account. I think we have to accept what is there and rather see how this is going to impact the customers. And to me, it's a good way to go because it's bringing some semblance of certainty in the industry. The uncertainty was too much. If you look at the 347 list that was produced, 155 of them have closed down. They're dead. Some of them I know have been dead for about 4 or 5 years. If you take the likes of Noble Dream, Eden, Microfinance, and so on. But customers' monies were locked in there. Okay. So it's good that the government is saying, okay, now we found 1 billion. go and identify those customers and give their monies back to them.
Okay.
And then the 192 are those who had insolvency challenges. I read a report of one where their capital adequacy ratio was in the high negative. So I think this is a good thing to be done to bring some certainty into the industry.
Okay.
It's good for customers. Yes, there's no doubt that there will be some tangential casualties like a few jobs lost here and there. But if you take the 155 institutions that were dead, they were dead. So there's no job loss there.
Okay.
Then the 192, those are also struggling. Some of them, they say they are trading, but they've more or less shut all their branches for a number of months. So at best, there were only one or two people who were there and attending to the odd customer that may come in. So I think this brings a good certainty into the system, and the confidence that we are all, crying for could be restored.
I want to understand the job of the other financial institution supervision department that was created at the Bank of Ghana, basically to do this job. And we're still finding ourselves here. Should we collapse that department because they've not yielded any positive
Get to understand
results?
it. I've listed that there are 5 subsectors according to Section 8 of Act 930. Now, the first 2, first 3, that is the universal banks, savings and loans, and finance houses. They come under the main BSD
Supervision
banking
of
supervision
the
department, yes, BSD. Then the other 2, that is the microfinance and the rural bank, they come under the other.
Yeah.
Right? In terms of numbers, you can put the numbers there. For universal banks, there are 23. For savings and loans, 38. For finance houses, 22. For rural banks, 144. And for microfinance, there were 484. Add them up, you get 711 institutions.
Okay.
That was too big for one department to handle. So it was divided into 2. That take the 144 and 484 and put them under other financial services supervision, and then the other 23 plus 60, 83 is under the main BSD.
Okay.
So things are being done. And since I think January 2018, no new license has been issued with these reforms going on, so that when the cleanup exercise is done, then they will see to issue a new license.
But there's also fundamentally been the concern about the mission drift, where we know that these microfinance sectors perform 2 roles: the financial intermediation and the other, which is the mediation, which is the lending part, and the social intermediation, which has to do with capacity building and educating the people or helping them with skills or financial what have you. Now, we know that mission drift, the course has been diverted, and over the years there's been complaints that these people now get into microfinance companies not to actually do these 2 things, but to enriching themselves or to get themselves rich. Didn't the Bank of Ghana notice all this while that people were pointing out, experts in that field were pointing out, Joe?
You see, it's a tough one. It's a tough one. When you say enriching themselves, it's a there were also some institutions that suffered some amount of mismanagement. And also, we all tend to forget that around 2014, there was a downturn in the economy.
Okay.
The growth rates dropped, SMEs stopped paying, right? So they were caught between a rock and a hard place. There was some level of mismanagement. There was some level of insider loans and everything. And there was some which were plain fraudulent. But I think let's be careful before we paint each and every institution with a fraudulent. I mean, one of the institutions, and I don't think I can mention names here. No. I knew them fairly well. They've collapsed, but I will be hesitant to say that those who set up that institution set it up with a fraudulent motive in mind. They had the best of intentions. The economy did not favor them. I believe that they did not have exactly the right capacity to manage. You see, one of the things also that went wrong was a lot of these institutions felt that microfinance is banking light.
Okay.
Microfinance is not banking light. Microfinance is not a slimmed down diet version of GCB. Okay. Microfinance is a nuanced beast in itself. Okay. And so when you a lot of them just took bankers and what I call suits and moved them from the commercial universal banking sector and moved them downstream to become microfinance institutions. That was bound to fail. That was bound to fail. So a lot of the institutions, you will find that even those at the helm did not understand the basic tenets of microfinance.
Exactly.
So, but that is different from saying that they were fraudulent.
It's a combination. It's a combination of the two.
I agree.
You had on one side the fraudulent people, and on the other side, and I'm coming to that, the people who are managing these companies who don't even know a hoot about what microfinance is all about. Does it even lie on the Bank of Ghana, or does the Bank of Ghana have the mandate to ensure that people who apply for licenses do what the ABC they say they want to do? Whose mandate is it? And whose mandate is it to check that even the people who man these companies have the knowledge and expertise to run the companies well?
Let me just make a short intervention. There's one flaw in what the Bank of Ghana did. If you just jump a little bit to the east and look at Nigeria, there was actually a special law for microfinance institutions that tried to lock them in to only operate as microfinance.
Okay.
Here, even the rules we gave them were, again, a slimmed down version of the universal banking rules, rather than set up a new set of rules that force you to operate in a way in which microfinance, in the way it is defined and in the way it has been successful and it is the way it has driven growth, should be. Okay. So, in a sense, we were all dancing a particular dance, right? There were microfinance institutions before this law came into. They had their own association, GAMFIN, and they were operating and they were doing pure microfinance. Okay. Then the law came. Then the increase in minimum capital now drove certain kinds of money into the microfinance space, who were more banking light than true microfinance persons. And this is the result. Okay. This is the result. So let's be careful here. Not all of them were fraudulent.
True.
There was a lot of mismanagement. There's a lot of misunderstanding, right? But the net result is that real people, real depositors, real parents, workers, mothers, traders have money locked in these institutions. And it's going to take a considerable amount of time for them to get it up.
To get it up. And that's where I'm driving the conversation right now. Nana, you wanted to make a point, or you disagree that it's a mixture of untrained people manning Microsoft company, microfinance companies, and then those who are fraudulent.
I don't disagree, but you see, they say that monkeys move in sizes, or is that what they say?
They play by sizes.
By sizes. Normally, if you take the 5 sectors I gave, we work on what you call the 80-20 rule.
Okay.
In the sense that the universal banks account for 80% of the sector and the other 20%.
20%.
Okay. So the skill set that you will require at the universal banking sector will not be the same skill set. So as you come down, the skill set reduces.
Okay.
Because the microfinance at the bottom is supposed to deal with actual microfinance. The Kofi Brookman seller who only wants 100 cedis to go and buy plantain or peanuts, that sort of thing.
There.
So for them, they don't need as much skill set as you would for a universal bank.
Okay.
So that's why we had a result of what you term mismanagement. Okay. And for to some extent, they did the best that they could, but they didn't have the skills. So then that's what contributed to their collapses. That is not to say that what your allegation of fraud may not have occurred. At the end of the day, we've been told that the directors of these 347 that have collapsed, plus the 39 micro credit institutions that will be under the registrar of companies, they have questions to answer, and some may have to answer them in court. At the moment, they are all in the hands of the receiver, and so they will dictate the pace that things should go.
When we come back from the break, we'll be looking at the communication approach of the Bank of Ghana. I've heard many of the microfinance companies talk about how they were not even informed, and they just realized that they just put their names out there. They just didn't know what was happening. We'll look at that approach, and we're aware that some 900 million has been released or is available for Bank of Ghana for this whole cleanup, even though we know we need 7 billion for the whole exercise we're talking about. But because Bank of Ghana is not being open and it's not comprehensively communicating activities of these companies to the public, we're questioning whether even the 9 million will be enough for the settlement of the depositors and the complete cleanup we're talking about. And then we'll also veer into the job losses and how the Bank of Ghana will be able to relate to the 137 companies that are in good standing going forward. Don't go away. We're still live on PM Express, and we're looking and assessing the crackdown on microfinance companies. We're looking at the Bank of Ghana's approach. And before I went on the break, I spoke about its communication approach and about the 900 million available. But you wanted to comment on the 80-20 rule that Nana spoke about.
Yes. The 80-20 rule is right in the sense that 80% of all the deposits in the country are held by the universal banks. But there's another side to this, which is that even though they're holding 80%, the other institutions are holding a much larger number of individuals when you count the individuals and not the sum of money they have.
Okay.
So that when you talk about pain in the economy, the pain from these other institutions will be much, much widespread than the pain from the universal banks. So from a compassionate point of view, we should be cautious about the 80-20 rule and start to think about the real individuals. Like I said, the mothers, the fathers, the plumber, the baker, the advertising executive, the farmers, the traders, the farm laborer, who are all caught in this mess, right?
Yeah.
And to be honest with you, sometimes there's a sense that the Bank of Ghana is a bit cavalier about the rest of the institutions because it has secured the 80%, and it has done.
Even though these institutions, you said within the week that they provide more jobs to the people.
Thank you. So what we're saying is that be a little bit more compassionate when dealing with these institutions, because there are a lot more people there, right? And that's the and we were talking before we went on the break. We were talking about the way it was communicated and the way it was done. Some of it is not really Bank of Ghana's fault, because there are so many institutions
that they don't even know they exist.
They know they exist. But record keeping has been poor. And let's be clear, there's a difference between the central bank over the years and the central bank now.
I agree.
And that previous administrations are actually very guilty of making this situation a lot worse.
In fact, the explanation is that many of the microfinance companies we've seen gone down. I mean, this new regime came to meet it, so they they had to deal with
it. Exactly, in the 155, they didn't go down now.
Is that what you meant when you said the bottom of the pyramid is in disarray?
The bottom of the pyramid is in major disarray, and the level of rot is huge. I tell you this 900 million is what you say, a lick and a wave of the finger.
Why?
Because record keeping is poor. Okay. Some of these institutions even have a reason to hide records. So because there's been malfeasance by the directors. So that 900 million is an estimate. Okay. I can't sit here and say it is less, but likely nobody can sit there and say with certainty that it won't be more. Okay. What we are praying is that it should be sufficient, because when you delve into the mass and when the receiver delves in there and start to take evidence of deposits, we could end up with a bigger amount of money missing. If we get less, thanks be to God, we can sort out the mess fairly quickly, but I doubt it.
Doubt it. Nana, would the 900 million be enough? And I mean, how's the process even like?
Yeah, well, as the regulator can come up with. And they did the same, the universal banking cleanup, and they will be doing the same thing with the remaining three, i.e. the rural banks, savings and loans, and finance households. Estimating 7 billion. It may be real, it may be insufficient or sufficient. So the 900 million estimate, and we just have to leave it to them to work it out. Now it's in the hands of the receiver, and the receiver said they are ready to go, and as early as Monday, people with genuine claims can even start receiving their monies through CBN. Worried about is the receiver being in Accra. Okay. So when Joe said 700 kilometers to the nearest city, I think he meant 700 kilometers to where the receiver is. Okay. If PwC is going to stay in Accra and then deal with, and Western region and so on, then it will be more than 700, but not to the branch. And so maybe they'll come up with a scheme where we'll be able to know how they will deal with at the region, that people can get claimed. Because you see, the intervention that Joe was talking about, by September, latest October, a new act is a new act because there was an amendment, Act 930, that deposit insurance scheme is coming into being, and it will come to the rescue of this bottom of the
to this?
Have to do a lot more. Number one, to instill confidence and trust back in these 137 companies. And it's not just going to be lip service. You got to make sure they have the liquidity, the cash to pay. You've got to put a scheme for them to be able to come to you if they don't have liquidity. You've got to have a program for building. We've talked about not understanding microfinance, that it's a different beast. You've got to have a scheme in place to train, build capacity, support them, so that the damage done to the public confidence in the financial system can start to be restored. That's really what you got to do.
Yeah.
And I know that there's been a statement here and there about the 137 institutions are strong and such, but it goes just beyond making a statement, right? And I'll be honest with you, the institution, the whole sector. At least within the next 3 months. If it doesn't, we're going to see a dragging along, a lot more pain. It's a lot of cash in quantum, and significantly not as many as the microfinance, but also a lot of potentially going to be harmed by the or be in pain over the reforms. The reforms must take place, continue unabated.
Okay.
But we have to start getting a human face to them.
Okay, and probably re-strategize how we do things. You agree?
Oh, yes. We are now going to look at the other sectors. But it's a question of money. You see, because the ultimate aim is to ensure that nobody. And so, yes, you have the will, but if you don't have the means, how do you go about it? And the Bank of Ghana doesn't have any money of their own. They have to depend on government for the money to save the people. So I think asking for a time frame for the resolution of the remaining 3 sectors, it's a question directed at the wrong person. We can't say that. So we have to.
The Bank of Ghana would have to tell us
even
that.
they can also.
But from
say
where
that.
you sit, you can put some
where
timelines.
where they say they can also even put a time. One is going to come. So maybe the best person will be Nandro.
But there's one thing that must be done.
Just briefly, we've run out of time.
There are billion that the earlier receiver is supposed to chase. He's only got 700. We must act on that.
We must act on that, and it's a very important conversation. Even with the 7 banks that went down, we're still talking about how the people who went wrong or faulted have not been dealt with. Going forward, we'll be looking at all of us. Joe Jackson is the Director of Business Operations at Dalex Finance. Otu Echampong